Welcome, dear traders. You're watching a recap of the Asian session. The bearish sentiment still dominates stock markets. European and the US stock indexes kept declining. As a result, yesterday, Wall Street saw the lowest closing levels in February. In the morning, Japanese and Australian stocks also slid to new lows. The downward movement was triggered by fresh U.S. economic data. The PMI indexes revealed yesterday showed that the U.S. economy remains strong. The services PMI index rose at the fastest pace in February, approaching 50.5 points. The manufacturing PMI advanced to 47.8 points. Such figures confirmed once again the likelihood of a further tightening. Against the background of fallen blue-chip stocks, the Dow and the S&P 500 ended yesterday's session at the lowest closing levels in February. The benchmark stock index in Australia dropped to its 6-week low in the morning, and now more traders are betting on a 50 basis point rate hike. According to the FEDWATCH tool, yesterday 18% of investors factored in such a scenario, and today this indicator has already risen to 21%. It's curious to see the market reaction to the Fed's meeting minutes. US Treasuries have been growing for several days. It means that more speculators have priced in a 50 basis point rate hike. US government bonds are one of the most popular safe haven assets. Demand for them usually grows amid aggressive tightening or expectations of it. In the morning, the yields of the government notes jumped, boosting the US dollar. The latter advanced above the resistance level of 104 amid risk aversion. In the Asian session, it was trading at 104.10 versus its main rivals, and the greenback is consolidating in the narrow range of 104.00 and 104.20 ahead of the Fed's minutes. They are on a tap today. Will the US dollar be able to recover to its previous highs? This is unlikely. The bullish trend has been unfolding for the whole of the last year, and the euro and the pound sterling were in the bear's close. So the greenback soared to a high of 113 in the fourth quarter of 2022. When the pound sterling recovered, the euro rebounded and the yen rolled back from its lows. It resumed the downward movement, which continued in February 2023. However, this week, the US dollar took second place among the strongest currencies thanks to the growing yield of the government bonds. The pound sterling holds the first position. The yen and the Aussie were much weaker. The dollar yen reached its highest level since December 20 yesterday, trading near 135.20. Its further trajectory will depend on the key level of 135, and the pair fell to 134.70 amid the consolidation of the US dollar ahead of the Fed's minutes. In the morning, it was moving in the downward channel of 134.50 and 135.10. Usually the yen depreciates when the US dollar gains a strong bullish sentiment. This was the case last year, and the bullish trend of the pair has been going on for 21 months. It occurred against the background of the ultra-loose monetary policy of the Bank of Japan, and the regulator made verbal interventions to support the national currency. However, at some point, the Ministry of Finance had to conduct several interventions. The situation had changed dramatically. Almost half of the pips the US dollar had gained against the yen was lost in just 3 months. It appears that the US dollar will hardly be able to retain the upper hand versus the yen in the near term. Besides, analysts anticipate some changes after the appointment of a new Bank of Japan governor in April this year. Compared to the Bank of Japan and the Fed, the Reserve Bank of Australia does not have room for maneuver when it comes to rate hikes. The leading economic index has been in a negative territory for the 8 months in a row. Wages grew at their fastest pace in a decade last quarter. In other words, the economy has been contracting for a long time, while inflation is still high. This might be a sign of an imminent recession or its start. The question is whether the Reserve Bank of Australia will start raising the interest rate more aggressively in such conditions. Analysts are casting doubt on such a scenario. The AUD-USD pair sank to 0.6814, and the Aussie was unable to regain ground even despite the consolidation of the US dollar. In the Asian session, it was trading in the range of 0.6814 and 0.6866. According to technical indicators, the main trend remains bearish. The Kiwi had a similar dynamic. The country is dealing with the consequences of the devastating hurricane. However, it's too early to assess the damage it has caused to the country's economy, and the Reserve Bank of New Zealand made such statement in today's meeting. It raised the interest rate by another half a point to the highest level since January 2009. At the same time, policymakers also touched upon the topic of a high inflation and the tight labor market. The Kiwi dollar pair jumped to a high of 0.6263 following the meeting. However, it failed to consolidate there. Traders priced in such a rate increase a long time ago. Besides, they are now mainly focused on the Fed meeting minutes. Therefore, the pair was trading at its highs and it was rather volatile. It dropped below 0.6220 in the Asian session, and it was moving between the resistance level of 0.6247 and the support level of 0.6206. And that's all for now. The Fed's meeting minutes and other macro stats will be published later today. If you want to keep close tabs on the latest market news, subscribe to our channel and see you soon.